Hi everyone, I'm Stephanie Thomas.
And I'm Mary Thomas.
From Thomas & Thomas PC. Thank you so much for finding us on the Sales Tax Sisters
channel.
Thank you. Today we're going to talk about
the difference between what you want to hear and what the truth is. A lot of times when we're dealing with our clients, you deal with someone who will argue to beat the band that whatever they're doing is quote unquote right, that something is not taxable or tax shouldn't be charged on something, or they shouldn't pay tax on something. And the thing about it is when you do it as long as we have, I think we both have over 20 years of experience each, you have people with varying degrees of a willingness to listen to what you're telling them. And there's a big difference between what the actual truth is versus what someone wants to hear. And I think that what happens sometimes with service providers is we want to give you the answer that you want to hear. We want to tell you that it's not taxable. We want to tell you that if you get an audit deficiency and it's something that you're upset about, we want to tell you that you can fight it. We want to tell you you have a leg to stand on. And sometimes we can't. And I think that when you hear something like that, it's very important that you say, okay, show me why you can't. Show me why you're telling me this.
Exactly.
Case law, land rulings,
the tax
code, a policy statement.
Something.
Show me why you're saying this. And then sit down and really talk to the person about why what they're showing you does or does not apply. I can't tell you how many times one of my favorite clients walked into my office and he said, look, the taxing authority I've got a deficiency assessment. They want this certain amount of money from me. It is material for me. I need you to fight this. And I looked at him, and I will be completely honest. The general rule is what he was doing was taxable. And so I'm looking at him, I'm thinking, why is he in my office? This is taxable. And then I said, wait a minute, hold up. Let's sit back and listen for a minute. He explained his business. He explained he showed me what the pretext of taxing him, what that was based on. He really did have a case. He really did have a situation where what he was selling was not taxable. And so we sat down, I eked out the argument, booted it up to the taxing authority, and this gentleman wound up not paying that tax because it genuinely was not due. So the reason that we're doing this video is we want to do two things. Number one, we want to shift your perception of when somebody tells you something is taxable or someone tells you, you know, John, you're right, this was an out-of-state transaction, but we've got to get an exemption certificate. That instead of being angry about it, you can pull back and say, okay, you know what? Let's get it done. And it not be something that provokes a lot of anger. It's just something that you have to do. So
sometimes, and that's the thing, sometimes, and I tell people this all the time, sometimes the tax code does not have to make sense. It is what it is. So even if you don't think that the rule is fair, even if you don't think it's right necessarily, some things are just the way they are, and you may have to get certain bits of documentation, like Mary was saying about exemption certificates or resale certificates or direct pay. You may have to do that, and that's to address any kind of deficiency or address any issue an auditor has, instead of being obstructive, yes,
and very angry about it because it's not helping your situation.
No.
And whoever's dealing with you, they don't want to deal with that. Nobody wants to walk into a wall of anger. So this is what I always tell people. Listen to what's going on. Be collaborative. If you have a consultant, that person works for you. That person wants to make you happy. 9 times out of 10, they want you to be happy. So what you're going to do is when they're telling you something, like we said in the previous video, if it doesn't make sense to you, call them up slow it down and
talk it out.
Exactly. Exactly. Because there are times when a client can introduce a fact into the scenario and it changes the whole thing.
Exactly.
So, that's one of the things. Be collaborative, slow it down, make sure you understand what's going on because prospectively you want to get it right. And know that sometimes you're going to be right. Sometimes what you're doing is not going to be taxable.
And sometimes you're going to get it wrong. And that's okay too. You just have to be open to hearing what an expert in the field is trying to tell you. And the other thing is, like Mary said, there is a reason behind them saying something is taxable or something is not taxable. They can provide you with the code reference or the rule reference, whatever, or the policy letter.
And really think actively about it because it's very common that you can see someone who is citing the right rule, but they interpreted it incorrectly.
Exactly.
Or they interpreted it outside of what the policy is. So just be very collaborative. Put your listening ears on. It doesn't make sense, ask questions until it does.
Exactly.
And know that there can be a difference between what you want to hear and what the truth is. It's up to you as the taxpayer. It's up to you to know how the rules apply to you. Just keep an open mind. Advocate for yourself with everybody so you make sure you get an equitable result.
And I think that's it.
That is it. So with that, if you like the video, please thumb us up and consider subscribing.
Yeah. Have a great day, everybody.
And we'll see you next time.
Bye.
Bye-bye.